Elon Musk has always been a figure that captures headlines, a man whose every move sparks debates, speculation, and sometimes controversy. When news broke that Musk had purchased $1 billion worth of Tesla shares, the financial world lit up instantly. Analysts scrambled to interpret the meaning behind such a massive transaction. Tesla investors celebrated, skeptics raised eyebrows, and ordinary people wondered what drove the world's richest man to pour such an astronomical amount of money back into the company he himself had founded and nurtured. To understand why Elon Musk would take such a step, one needs to dive deep into his mindset, his history with Tesla, his vision for the company, and the greater economic and personal circumstances that surround this decision. It is never just about numbers with Musk, and rarely is it about short-term gains. His actions are often layered with long-term strategy, emotional conviction, and a desire to maintain control over the forces that shape the future of technology. The purchase of $1 billion in shares is not just a statement of wealth, it is a statement of belief. Musk has always been vocal about betting on Tesla when few others would. In the early days of the company, when Tesla was on the brink of collapse and investors doubted the viability of an electric vehicle revolution, Musk put in his own money to keep the dream alive. Back in 2008, during the global financial crisis, Tesla was struggling to pay employees and suppliers. Musk went so far as to pour in tens of millions from his personal fortune, even borrowing money just to make payroll. This history sets the context. Elon is not a man who stands back and watches as Tesla's fate is determined by outsiders. He steps in, places his own skin in the game, and reaffirms his personal commitment. Fast forward to the present, and a $1 billion purchase sends the same message to Wall Street and the world. Musk believes Tesla is undervalued. Tesla's growth story is far from over, and he is willing to risk his own capital to prove it. To understand why he would buy so many shares at this particular moment, one must consider Tesla's journey over the past few years. The company has faced enormous challenges. Supply chain disruptions during the pandemic tested its resilience. Rising interest rates and inflationary pressures cast doubt on the affordability of electric cars for the average consumer. Competition has intensified as automakers around the world, from China's BYD to Germany's Volkswagen to America's own General Motors and Ford, have poured billions into their own EV lineups. Tesla's stock price, which once soared to astronomical levels, making it one of the most valuable companies in the world, experienced significant swings. In moments of pessimism, critics argued Tesla was overhyped, overvalued, and destined to fall. It is precisely in times like these that Elon Musk thrives. He has a long track record of moving against the tide, of buying when others sell, and of defying conventional wisdom. His billion-dollar buy is a loud declaration. He sees Tesla's long-term trajectory in a way that skeptics cannot. There is also the issue of control. Elon Musk has always been wary of losing control over Tesla's destiny. As the company grows, so does the influence of institutional investors, hedge funds, and outside shareholders. While Tesla is public, Musk's ownership stake has always been central to his ability to guide its direction. By purchasing such a massive block of shares, he reasserts that control. Every additional percentage point of ownership cements his authority in shareholder votes and strengthens his position against activist investors, who might push for changes that go against his vision. For Musk, Tesla is not just another stock on the market. It is his brainchild, his revolution, his way of reshaping the world's dependence on fossil fuels and accelerating humanity toward a sustainable future. Allowing too much influence to slip into the hands of outsiders could compromise that mission. Buying $1 billion worth of shares is as much about philosophy as it is about finance. Yet, one cannot ignore the financial aspects of the move. When Musk invests such a large sum, he is making a judgment call that the market is undervaluing Tesla's future. He has repeatedly said that he believes Tesla has the potential to become not just the world's leading car maker, but a robotics, energy, and artificial intelligence powerhouse. Tesla is already more than a car company. Its advancements in battery storage, solar technology, and autonomous driving software position it at the center of multiple trillion-dollar industries. From Musk's perspective, $1 billion spent now could multiply into many billions in the years to come, especially if Tesla cracks full self-driving technology or transforms its energy storage business into a global utility provider. Few people on Earth have the insiders perspective Musk does on Tesla's roadmap. If he is buying heavily, it signals his conviction that Tesla's best days lie ahead. Some critics might argue that Elon Musk's decision is motivated by ego or optics, a way to reassure markets that Tesla's leader has unshakable faith. Certainly, Optics play a role. Investors often look to Musk's personal actions as cues. If he were selling stock, panic would spread like wildfire. By buying, he sends the opposite message: confidence, stability, and long-term belief. But Musk is not known to throw around $1 billion purely for show. His past behavior demonstrates that he puts money in when he sees a genuine opportunity. Remember that Musk's wealth, although massive, is largely tied up in the value of Tesla shares themselves. By purchasing even more, he is doubling down on his own creation, intertwining his fortune even further with the company's fate. The timing of the purchase also deserves close examination.
Économique, un certain remaraille.
Markets fluctuate daily with news of interest rate hikes, inflation data, and geopolitical tensions. Tech stocks in particular have experienced volatility, and Tesla has often been at the center of such swings. For many investors, such moments are terrifying. For Elon Musk, they are opportunities. He has often said that volatility doesn't bother him, because what matters is where the company will be 10 years from now. By purchasing $1 billion worth of shares during a time of market uncertainty, Musk is effectively saying, ignore the noise, the dips, and the fluctuations. Focus instead on the exponential growth curve. Tesla is still climbing. He is playing the long game, as he always has, and inviting others to do the same. It is also worth noting that Elon Musk has faced criticism for dividing his attention across multiple ventures. From SpaceX to Neuralink to the Boring Company, his plate is overflowing with ambitious projects. Some Tesla shareholders have worried that he might be distracted, that his passion is spread too thin. A massive buy-in of Tesla shares works as a counter to that narrative. It is a reminder that Tesla is still central to his mission, still worthy of his direct personal investment, and still the company he sees as the cornerstone of his impact on the world. This act quiets doubters who whisper that Musk is moving on. Quite the opposite, he is all in. Another layer of interpretation lies in the broader transition to clean energy. Governments worldwide are tightening emission standards, investing in EV infrastructure, and setting deadlines for the phase-out of internal combustion engines. The global automotive industry is undergoing a seismic shift, and Tesla remains ahead in many aspects. However, to maintain that lead, the company needs massive capital for research, development, scaling factories, and pushing new technologies to market. Musk knows that market confidence fuels Tesla's ability to raise capital when needed. By personally buying shares, he amplifies confidence, making it easier for Tesla to fund its expansion at favorable terms. It is a chain reaction. His personal investment increases investor faith, which strengthens Tesla's market capitalization, which then enables the company to grow faster. In essence, his billion-dollar purchase is not just money into his own pocket, it is a catalyst for Tesla's continued growth. For ordinary investors, Musk's move also carries psychological weight. Many people look up to him not just as a CEO, but as a visionary who has consistently defied expectations. When he buys Tesla stock, retail investors interpret it as a green light. It encourages them to hold, to buy more, and to resist panic selling during downturns. This collective psychology stabilizes Tesla's investor base, reducing volatility in the long run. Musk understands this dynamic and leverages it. His actions are never isolated. They ripple across the financial landscape and influence millions of decisions by others. But beneath the business logic, financial strategy, and market psychology, there is also something deeply personal about Musk's relationship with Tesla. This is not simply an investment portfolio decision, it is about identity. Musk has poured years of his life into Tesla, enduring sleepless nights, public criticism, and near-bankruptcy experiences to bring it to where it is today. For him, Tesla is not just another company, it is the embodiment of his vision for the future. To buy $1 billion worth of shares is to say once again that he is tied to Tesla for better or worse, that he is prepared to ride out the storms, and that he wants his own fortune to rise and fall with the company he built. That kind of personal alignment is rare in the corporate world, where CEOs often diversify, cash out, or distance themselves from risk. Musk instead embraces the risk because Tesla is not just business, it is personal.